webinar. This is basically an update, well, a review and an update on a subject that's very near and dear to myself. Before we get started, though, first of all, our good old housekeeping slides. Here with us at EAN, you can study astrology 3 different ways. You can listen to our free weekly audio podcasts. You can subscribe to our Astro Library, and you can enroll in our multimedia course. Here's a slide on our Astro Library. It contains a dozen plus years of materials by myself and other evolutionary astrologers at various live events and webinars such as these. You can see we've got it divided into 3 different sections. You can subscribe for 1 month, 6 months, 12 months, or you can do a monthly recurring that you can cancel at any time. Of course, our multimedia course is divided up into 3 different segments that you can see on your screen here. And the first 2 segments are available materials only, which is the binders and the DVDs, or you can get digital only. Everything is online with an internet-friendly device, or you can enroll in segment 1 and 2 both ways. Either way you enroll does include our free live monthly class on segment 1. And segment 3 is available in the materials phase only, binders and DVDs. We have not made it digital yet. So again, our subject matter tonight is the public banking revolution. This is not going to be an exhausted version of it. That could take us forever. I'm basically going to be speaking to the areas that I feel inclined as representing what is most prosperous for all citizens moving forward on planet Earth. While this will be from the perspective of the United States, many of the principles that I'm going to spout will be relevant to other countries, and many of the solutions will be relevant outside the U.S. as well. If you have questions, you're welcome to ask them on the Q&A pane. Leroy will answer back and forth with you. He's got, I think, more financial knowledge than I do, so I'm inviting him to participate in this call. And at his discretion, we can also open lines if you want to ask questions live, or he feels that he would like my opinion on something. So let's just recap some history here, all right? As we go back in time, from the perspective of evolutionary astrology, which is always trying to align itself with natural law from observe and correlate, 10,000, 50,000, 100,000 years ago, most of our ancient societies, if not all, were matriarchally based up until the last 8 to 9,000 years ago. And they lived pretty naturally, and they lived in natural abundance. They were probably the originators of what we would call the barter system, trading goods and services without any need for currency or a medium of exchange. For example, here in the United States, many of our original Native Americans did not believe in owning the land. It just wasn't even a concept they could understand. The land was Mother Earth, and she owned the people, not vice versa. Here is one of the paraphrases of Chief Seattle's famous quotes. "The earth is our mother. Whatever befalls the earth befalls the sons and daughters of the earth. This we know. All things are connected like the blood which unites one family. All things are connected. We did not weave the web of life. We are merely strands in it. Whatever we do to the web, we do to ourselves." Well, this is used a lot in environmental activism. This is also true for us with the whole banking situation. I feel that any issue that we may be involved with has a common denominator, and that is whether we have prosperity for all or just the limited few. In other words, banking policies and the creation of currencies is relative to all of us in every issue. However, lending and borrowing is as old as money itself. In some ancient societies, such as Babylonia, Egypt, and Persia, one party would lend a cow to another party, and that borrower would pay interest later by returning the cow with a new calf. Again, when it was nature, when it was animals and grains of seed, many of that stuff was just naturally abundant, naturally self-reproducing. And as commodity money, which we'll learn about this, gave way to metal coins, which are still commodity money, the charging of interest became more and more common. And Aristotle is famous for saying that coins, unlike grain seeds in animals, do not reproduce themselves. And as many of us in the world of EA know, there was a gradual shift between 7,000 to 6,000 BC, where we shifted from matriarchal to patriarchal societies, and ever since then, patriarchal principles have been gathering steam to the point that over the last 2,000 years of the Piscean Age, we're so patriarchally based, we don't even know the difference. We don't even know the perspective compared to matriarchal principles of giving, sharing, and including versus those patriarchal principles of taking, excluding, and hoarding. So a little bit of history of what we've used for money. As you can see, we have evidence going back to 12,000 BC with cattle, sheep, goats, grain seeds. The first evidence of tally sticks, which I will explain, have been found back to baboon bones in 9,000 BC. We first started using metal coins around 6 to 700 BC. Silver coins 500 BC, first known use of paper banknotes 800 AD. And of course, when the Europeans came over to North America, the American Indians used the wampum belts, which you see a picture of right here, and all of these would be given a value that they could use in exchange for goods and services. Tally sticks. Here's a picture of tally sticks in the background for you from medieval Europe if you'd like to see it. They first appeared as notches on animal bones. And again, here's the baboon one that dates back to 9,000 BC. They were mentioned by, I think it's Pliny the Elder. Marco Polo saw them in China. Medieval Europe used tally sticks, especially in England, but all over Europe, from the 1100s to the 1800s. 700 years, tally sticks were in use. And how they would use that is the stick was split down the middle, giving the two halves to the two deal makers after there was a notch put in it that would indicate whatever the exchange was between the two parties. And so each party would take their half of the tally stick and they would meet months or years later, and that's how they would tally it up and have an exchange back of either coins, goods and services, whatever way you wanted to call it. In other words, this operated as gold coins, it operated as a checkbook, it operated as loaning something else out that could be paid back with interest. I'm not going to remember the dates, but there's a pretty famous story in England. Oh gosh, I want to say probably the 17 or 1800s, as they were really starting to set up parliament separate from the monarchy, where they decided to discontinue the use of tally sticks because they were moving into probably fractional reserve banking, which I'll explain. And so everybody was required to bring their tally sticks to Parliament. They created a big bonfire because these tally sticks were wood, and they accidentally burned down Parliament. I always thought that one was a little fascinating. Coinage. Of course, we mentioned how this first came into use, and these examples that you see, this is some of the earliest examples of melted coinage. These are some more right here. I think these are Egyptian. But what we really have to start to learn here as we start this history of money is we basically have two types of money, commodity and fiat. And commodity money means that the money or the object is valuable itself, whether it is an animal or it is seashells or it is gold or another metal. Fiat money, fiat means so be it in Latin. Fiat has come to represent anything that we agree to give value to. So for instance, if you look at the paper of a dollar bill or an English pound note, the paper itself doesn't have as much value as what is written on it. We agree that it has that value. As we're moving into all of this digital currency, which we'll talk about as well, that also falls under the category of fiat money. Then there's a lot of discussion back and forth on whether or not we should return to commodity money such as the gold standard or the silver standard. Again, more details on this or more comments as we go along. One of the things that has started to happen though in the modern world is while the gold standard would stabilize money and stabilize prices, economists who have studied the history of a metal standard would find higher rates of unemployment because, excuse me, thought I was going to burp or sneeze, sorry, it passed. What they would find with, for instance, the gold standard was, again, higher rates of unemployment because there wasn't that ability to increase or decrease money supply as necessary, say with a natural disaster that would come along. And all of a sudden, we needed more money to rebuild. We needed to, take care of a place such as Katrina when the hurricane came along. Now, fractional reserve banking. Early goldsmiths lent out more paper receipts, which again is that fiat money, than the amount of gold and silver or commodity money that they kept in their vaults. They found that when people would put their money into their safekeeping with their vaults, they'd never come and get 100% of their gold and silver out. And over time, what the goldsmiths observed was that on average, people would come out and get 10% at a time. So what did the goldsmiths started to do? They started to lend out more than they actually had in reserves. And eventually this led to the concept of banks lending more money, whether it was commodity, gold-backed standard, or fiat, than they would keep in reserve, which equal to the deposits of their customers. So if you're not aware of this, banks don't keep reserves in their bank vaults anymore equal to the deposits that you have at the bank. And today, banks typically keep reserve ratios of 3 to 5%. When we had the financial meltdown in 2008, that's when they started having all of these bank reviews come into place, and they found that many banks had less than 3% reserves of what their deposits were. Then banks were gambling with this money, which they've been doing since the late 90s when we took away the Glass-Steagall Act here in the United States, which since the Depression era in the 30s kept investment banking and commercial banking separate. Investment banking is more riskier banking. Commercial banking is fairly stable because, again, it's customers' cash, and banks can't risk so much with that, although this is what we've been doing again since the late 1990s, and it has not been corrected yet. What would happen throughout history, though, is we would have panics, which would be a public fear over something, and it would lead to what were called runs on the banks. And the banks would collapse because all the customers would start to come in and they would want 100% of their funds, and the banks didn't have it. Banks went belly up. And so this caused a lot of interest in how are we going to stabilize our monetary systems? How are we going to make sure that crooked banks don't gamble things away? Which is what happened in the roaring 20s leading up to the Great Depression. So we went back and forth over time with what we would call private versus public central banking, or a government central bank or a non-government central bank that would ultimately be in charge of keeping everything safe and stable. However, we did create fractional reserve banking as a standard in the late 1600s. King William III was allowed into power in England because he agreed to give control of the money, both its creation, supply, and distribution, to private European bankers. And this is the Bank of England's known as the BOE. So it allowed private banking to really create and loan the government money to be repaid by the taxpayers with interest. So the BOE created the first permanent federal loan with only the interest to be repaid. And so BOE really formalized the fractional reserve lending. And so as the English and others came over to North America, over to the New World, and we set up these colonies here in the U.S., what happened was Benjamin Franklin and the Quakers in Pennsylvania really created the first examples of public banking. They created their own colonial scrip, which was paper money, and they did it just within their colony, Pennsylvania, and they went back and forth with it for, I don't remember the period of time, but many, many decades. And they didn't have taxes. They were able to fund any of their own infrastructure needs with their own colonial script. They didn't overprint the money. They would print it when they needed to pay their citizens, the colonists, for any goods or services that were necessary to create. However, King George III was always running short of money, and he kept piling on more and more taxes to the colonies, and he would insist that the taxes needed to be paid in gold. Well, it so happened that what was it called? The Eastern India Company, the famous tea company, that was supposedly had a monopoly on tea. That was the only place where the colonists could buy it, was from the India Tea Company, and through England paying in gold. Well, as we all know, that's led to the Boston Tea Party revolt, which was really taxation without representation. So none of the colonies had any representation in English Parliament. And the reason you see this picture here, the Indian, these colonists dressed up as Indians when they threw all the tea overboard at Boston and tried to blame the Indians. So that's why we've come to this representation of a photo right here. But basically, they really collapsed the colonies. And we all know what happened. It led to the Declaration of Independence and the U.S. Revolution. And so the history of the United States has always been full of private versus public control of the monetary supply and policies. And of course, we know the public example with the Quakers in Pennsylvania that worked just fine for a long period of time. And the private control was basically the European financial elite that took over and created the Bank of England and then wanted to move over and do the same thing into the U.S. there were several national banks that were created. The first national bank charter was allowed to run out. Then they created the second national bank in an attempt to try and do it again. And Andrew Jackson in the 1830s recognized what the money control power elites were trying to do, and he denied the charter renewal for a second 20 years, and he ran for re-election on that. And of course, there was an assassination attempt made upon him, and Robert Gover, a astrologer that I worked with, whose book Time and Money, I really recommend, whether you're an astrologer or a non-astrologer, I really recommend his book Time and Money. Robert passed away early 2015, but he did a lot of research, and the story goes that the gentleman who tried to assassinate President Jackson had wet powder in his gun, and so the gun didn't go off, and it was a failed assassination attempt. There are those who really feel that President Lincoln was assassinated over the control of power to print money. What happened was the financial elites in the Northeast allowed the federal government to print what are called commonly greenbacks in order to pay for the Civil War, to free the slaves. And as Lincoln realized how well this actually worked and operated when the government could print its own money, again, to pay for goods and services, soldiers fighting, to create, to provide the guns and the horses and ammunition and food and supplies and all that. Again, money tied to goods and services that are actually useful to a society holds inflation down. We don't have to worry about overinflation in those when it's tied to goods and services, when it's tied to the demand for goods and services. So he had announced after the war that he intended to keep them in circulation, and a week later he was dead. Here's a quote by him. There's lots of quotes out there, but this is actually an Abraham Lincoln quote. There's lots of quotes attributed to him. The money powers prey upon nations in time of peace and conspire against it in times of adversity. It denounces as public enemies all who question its methods or throw light upon its crimes. I have two great enemies, the Southern Army in front of me and the bankers in the rear. Of the two, the one at my rear is my greatest foe. Moving forward, the 1913 U.S. Federal Reserve Act was preceded by what is commonly known as the 1910 Federal Reserve Conspiracy. And probably the most famous book about it is The Creature from Jekyll Island, A Second Look at the Federal Reserve by G. Edward Griffin. Book is still in print if you'd like to get a copy from Amazon. And basically there was a group of U.S. and European financial elites. There was a group of 7 of them. Think of any famous name, J.P. Morgan, Rothschild, Rockefellers. They all traveled secretly using no last names, and some of them used alias first names. They met 7 of them and traveled on a train down to Jekyll Island outside of Georgia. And they basically crafted legislation that ended up being the Federal Reserve Act. Now there's a lot more to it politically. It's a pretty interesting read. If you're interested in something like this, you can Google it and you'll find all kinds of information on this. It took them a while to get this passed. And the theory goes that Woodrow Wilson, who signed it into law in 1913, was basically financed to run for office by these financial elites, although that was not known at the time he was running. And of course, if any of you have heard the name Rothschild, Mayer Amschel Rothschild was a court Jew Court Jews were Jews from Europe who basically financed the courts of Europe, the monarchies and the financial elites. Mayer Rothschild had 5 sons, and he sent those 5 sons off to the various power houses in Europe. He sent one to England, he sent one to Paris, I don't remember, probably one to Switzerland. I don't remember the 5 places he sent them. You can easily research that if you want. He's famous for saying, "Give me control of a nation's money, and I care not who makes the laws." The family's representatives, Paul Warburg, who was the character in Little Orphan Annie, Daddy Warbucks. Paul Warburg, he was that character in I think it was plays. And he, at the time, in the early 1900s, was the richest man in Europe and in cahoots with the Rothschilds in Europe and the Rockefellers in the U.S. He was one of the 7 that was in these meetings working around getting this Federal Reserve Act created. Now, basically what this act did is the legislative and executive branches of the federal government gave away our constitutional power to coin money and regulate the value thereof. In other words, they came up with a fantastic name, the Federal Reserve System, or Fed as it's known today, and it's basically a private institution. It has 12 member branches that are 100% owned by the private banks, basically through stock. The reason these 12 member branches came about was because there was a lot of distrust of the New York bankers in the early 1900s. This was following the 1907 panics, which many feel were created by the financial elite bankers out of New York. By the way, during that time period in the early 1900s, if I'm remembering correctly, there were Uranus, Neptune oppositions going on. I don't remember the signs, but I remember there being like 11 or 13 Uranus-Neptune oppositions. So you can imagine the upsets, Uranus, and the shenanigans and secrets, Neptune, wool over the eye, Neptune, that was going on. So again, they created those 12 branches because on a public level, it appeared that they were really dispersing this power of the Northeast banks across the country so that they could not manipulate money and cause this chaos to the public. But basically what happens is the Federal Reserve is the one who now prints the money and it loans it to the government to be paid back with interest. That good old federal debt that's always talked about. I didn't go back and look this fact up, but it's either 1/3 or 2/3 of that debt is owed back to the Federal Reserve. The interest is owed back to it. And what this also then is allowed U.S. banks to create a monopoly over the creation of money or credit. Here is the chart for the Federal Reserve Act, if you're interested. It was actually signed by Woodrow Wilson December 23rd, 1913 in Washington, D.C., just before the holidays. And I've never seen a time for this chart other than 6:02 p.m. Gives it an 18-degree Cancer rising. Those of you who know evolutionary astrology and Pluto is representative of the soul, whether it is a human or a corporation, 12th house Pluto is well known for all of the issues of secrecy, of behind the scene things going on. We have a Jupiter opposition to Saturn retrograde. Both of these are square the nodes of the moon. We have a nodal opposition going on right now. I'm always hoping when I look at aspects to the Federal Reserve's chart that perhaps we might see things break in the news. 2013, the 100-year anniversary, there was one day of articles in the paper. You talk about keeping something like that secret. We're coming off of the 2008 financial meltdown, and they managed to just keep that under the wings that it was the 100-year anniversary of the Federal Reserve. Why wouldn't we celebrate that like we celebrate the 4th of July? Because it was a pretty in my eyes, I agree. You know, there are always those who will counteract conspiracy theories, but in my research since the late 2000s when Pluto went into Capricorn, I have a tendency to agree that this was a pretty underhanded way of taking control of monetary policy and supply by the financial elite. The Europeans moving over to the US. Lots of aspects going on here, as you can see. I did a transit chart for today. You can see that Pluto next year will go back and forth over the 7th house cusp of the Fed chart. It will oppose Mars 3 times, maybe 5. I didn't look that up, in 2019-20. We'll look at the Fed chart on the US chart here in just a moment as well. There's lots of indicators there. Lots of planets in Cancer and Capricorn here that you would hope with Pluto's transit through Capricorn, Uranus's transit through Aries starting to square this stuff right here, that we would start to see some news coming out. If nothing else, it's people like me spreading it on a grassroots level as much as possible, which is what the polarity points of Uranus and Pluto, which is Cancer, and Pluto in Capricorn, which is Cancer, and Uranus in Aries, which is Libra. Cancer, Libra, it's grassroots, community, groups, spread, starting to help people recognize this. And I'll speak to an organization here in the United States that's doing this very well. Stay tuned. With Pluto going over in the 7th house cusp and opposing Mars, what are we going to see? Interest rates go up? Oh, stay tuned. I don't know how well that's going to work because so much of the monetary supply in the world in general is still contracting. That's why you're not getting wages, wage increase. It's why we're really, seeing most of the wealth go to the 1%.
Kim?
I wish it, yes, go ahead.
Just an observation. I guess I haven't really paid attention to completely since now you put this chart up. How would you objectively kind of read those 4 planets in the 12th and the first houses of the Federal Reserve chart being retrograde? Isn't that kind of feels like an omen coming with the Pluto balsamic Pluto, the Pluto return in the U.S. chart? And how would you interpret that? 4 retrograde.
Oh, that's a good question. First of all, not only do we have the 12th house Pluto, we have Mars and Neptune, which I always call this planetary pair, honesty in action, and it's a balsamic to Neptune. So this is another one of these underhanded actions going on for entirely self-focused reasons by the Fed. But the 4 retrograde planets, as you mentioned that question, what popped into my mind is, again, the history of the United States has always been about who's going to control the money. Why do you think so? What gets written in the history books is all of the colonists came to the New World for religious freedom, but it was financial freedom as well. And the financial freedom was most likely a bigger issue than the religious freedom. And so what did the European financial elites do? Followed them over and tried again and again and again throughout the first, what would it be, 150 years almost of the U.S. history, trying to get a central bank that they could control. Private central bank, they succeeded. Now, perhaps going forward into the future with these 4 planets retrograde, it's not over yet. The truth can come out. Stay tuned for more on this as we continue moving through. There's also this Sun at 1 Capricorn to Pluto at 0 Cancer.
Such a
You
tight
know,
opposition, yes.
there's a power struggle that's going on here. And Saturn square the node. Saturn and Gemini talking out of both sides of the mouth. They presented the bill one way in Congress, and they presented the bill one way to the public. In other words, these financial elites, that some of them that met on Jekyll Island, actually went out in public trying to lambaste the bill and say they were against it, because then the public went, well, if you're against it, I'm for it. So there was a lot of that was going on in that time period. But Saturn square the node to skip steps and responsibility. We have Mercury square the nodes, skip steps in honest communications here. And we even have Venus square the nodes, and Venus is one of the first archetypes ruling the second house in Taurus, representing money, resources. Venus square the nodes with this.
Mm-hmm.
Now, isn't it interesting as you're watching this? I got True Node here. Look at where the nodes are today on this nodal inversion, and truth coming out if we care to look at the facts and the details with this Jupiter stationary direct right now. Oh, and by the way, squaring these as well. And here's Saturn opposing natal Saturn. Here's these planets in Gemini. I had no idea when I set the date for this class that these were the transits. I just drew up the chart today, and I thought, well, let's see what Pluto's going to do. Let's see where Uranus is at.
Pretty dramatic, isn't it? Yeah.
And then I started seeing everything else. Yeah. Look at this. I use the Gemini rising chart, which is a chart that Jeffrey Wolf Green, the creator of evolutionary astrology, uses, and also the one that Robert Gover used. And Robert's theory was that as these guys were hashing everything out in Philadelphia back in 1773, 4, 5, 6, as they were hashing it out and really starting to gel this together, he said what was typical for that lifestyle is after these men would meet in, Philadelphia Hall, Independence Hall, or whatever, they would probably almost always ended up at the pub having ale and food, talking about it into the night, which is where the 2:13 a.m. comes from. Now, don't quote me as who the exact person is who brought that forth. I'm sure there's some other astrologers and historians that were trying to cover facts. Quite frankly, those who use the Sibley chart, which is the 5:10 p.m. for July 4th, I think both charts work. I think the Sibley chart is like, what was it? 9 degrees Sag rising, everything's opposite. It's a second house Pluto. But the founding fathers who were Freemasons could have easily had the basic knowledge of astrology. Not a lot like many of us on this call, but they had some basics, and they did know about the outer planets. And so here are 3 of the most best money planets: Venus, Jupiter, Sun, in the second house. And in Cancer, community, home, family. Look at how, as we know, no matter what chart you use, Sun in Cancer, which Canada shares with us, I think they're July 1st, mom and apple pie and all that kind of stuff that was going on. The Mercury retrograde, I don't know quite for sure what they would have said about that, but here's that Mercury-Pluto opposition, which was also representative of going back and forth of are we going to be a republic, which is what we are? Are we going to be a democracy? Are we going to have, how are we going to create taxation with representation? And all those various things that they spoke about. Federal Reserve chart is what's here in this outer circle that's going on. And look at how the soul of the Fed, the Federal Reserve System, is right here on the U.S. Venus. Who took the pocketbook? And the South Node on Neptune. I think this is part of also some of the shenanigans that I'm just going to loosely say, has went on. Here's all the the truth versus the lies that have been going on, with the feds as it starts to fall in. Here's the son of the Federal Reserve in the eighth house in the Gemini rising chart here. We're going to take control of the money. Again, there's lots of fascinating things we could look at and talk about here for the next 2 hours, but you've got these charts here to look at and continue on with yourself. So that's the history. Let me move forward into a little more modern times today. John Kenneth Galbraith was a famous, in simple terms, inclusive-based economist who was quite active in the earlier to mid part of last century. And he's famous for this quote: "The process by which banks create money is so simple that the mind is repelled." And here's how they do it: with fiat money, or what we would call double entry bookkeeping. And my background is bookkeeping. Self-taught, did it for a number of years with various businesses. And so this made sense to me. This is how I knew bookkeeping, and I did it by hand and computers. But 97% of the money in circulation today is created through accounting entries in computers changing to accounts, the lender and the borrower, with debits and credits. The history of this is it was developed by 13th century Italian bankers because it allowed the extension of credit without the exchange of physical coins, which A, are limited in supply, and B, pretty risky to be carrying around. Bank robbers, anybody? So in the double entry bookkeeping, let's say you go to the bank and you want a loan for $1,000. The bank debits your account for $1,000 and it credits its account for $1,000. And as you pay it off with interest, the bank then keeps track of this until this is zero, and it's going to have another account over here keeping all the interest. But banks don't have the money when you go in and get a $1,000 loan. It's just created through a bookkeeping entry. And this is what we've been doing for the last 100 years. By the way, credit was really created. Credit cards were created in the 1920s when Uranus was in Pisces. And when they first came out, everybody started getting credit and these credit cards, and they would get these lines of credit, and what would they go do? They'd go play it on the stock market. That was a lot of what created some of the stock market crashes as well. And it wasn't just being done by the financial elite. It was also being done by your average person who went belly up. And so again, paper bills and metal coins that we think of as money makes up only 3% of the money supply. 97% of our money is in the form of credit to the fortunate few and debt to the not so fortunate many. Now we are starting to see what happened in the U.S. The federal administration started coming out with saying it wanted to create new rules for payday loans that charge, outrageous percentage rates for interest, turning out to be something like 300% a year. Here in South Dakota, we are known for having a lot of credit card industries and banks because we have no limits on interest rates in our state. So a lot of banks will incorporate here for their credit card industries because they can charge whatever interest rates they want. We actually have 2 initiatives on our statewide ballots this fall to try and put limits on the amount of interest or that can be charged, again, loosely known as the payday loans. And so, just for sake of explanation, usury is the old term for interest, and it used to mean any type of interest charges. This is a drawing of Jesus overturning the tables in the temples from the Bible stories. But usury is a practice of lending money and charging the borrower interest. Today we know it as an exorbitant or highly or an illegally high rate. So there's been research done on this by some economists, and I'm not going to remember the country, over in Europe. And they basically have found that roughly 1/3 of everything we buy goes to interest. So you're going to go buy a TV set for $1,000, but 1/3 of that $1,000 is basically interest. The basic manufacturers have to take short-term loans to buy their material goods, to those supplies, to pay the payroll, to create the goods and services, to then ship it, to then sell it. And so interest, instead of, it's not always, so when you think that you have a 0% interest rate, yippee! Well, again, almost anything you buy today, 1/3 of the cost of it is interest that's just been buried into the cost of goods and services relative to what you, the consumer, are going to pay for it. Now, this is also true in government entities, cities and counties, states, just having to pay for infrastructure. Having to pay for various types of services that our public entities provide. In the U.S., 80% of the population are net borrowers, 10% break even, and 10% are net lenders. In other words, interest is a regressive tax that the poor and middle class pay to the rich. Interest now with the Federal Reserve System basically goes to mainly private banks in the U.S., which create money as debt, for which more is always owed back than was advanced in the original loan. This is the ultimate Ponzi scheme. When you loan $1,000, but the borrower has to pay back $1,000 plus $100 in interest at 10%, say, it creates this effect of always having to go out and get another loan and another loan and another loan on a broad scale in order to come up with the money to pay back the interest which was not loaned out. We can actually loan out with a 0% interest. It's, that's what was done in the colonial days with the Quakers. That's what's been done in various other parts of the world where they work with these little microloans for many times women in developing countries trying to start small businesses to pay for food. I wanted to just talk a little bit about some of these alternative currencies that have been going on. We don't hear as much about them now since the 2008 financial downturn, but exchanges came back into being a little more vogue. So did bartering, so did community currencies. There are some cities in the U.S. and probably in other parts of the world as well where the community will create its own currency. And it can only be used within that community, but the money stays in the community. And it can be used back and forth between the grocery store and the bookstore and the other various local-based businesses. As a whole, these are good complementary currencies. They tend to be counter-cyclic. For instance, when the value of the dollar goes down, these currencies become more popular. When they're drawdowns, they're not universally accepted. And many times these types of currencies are just too limited for any large-scale projects. One of the things that came up through 2008 meltdown was moveyourmoney.org, which was get it out of the too big to fail banks and put it into your community banks and your credit unions. which again are usually owned by the members of the bank. The money doesn't go to the CEO. It is returned back to the stockholders, which are, again, the members of the bank with their deposits in there. Another still very popular alternative currency is the precious and non-precious metals. Same thing. When the value of a currency goes down, their value tends to go up. The limitation of the precious metals, for instance, something like the gold standard, is it is a non-expandable money supply. There's only so much gold on planet Earth. There's only so much of a various types of metals that we can use. It will stabilize prices, but again, the research through history has shown it does have a tendency to increase or create higher rates of unemployment. When the feds, remember the Federal Reserve Act of 1913, as they were just starting to take control of all the money supply in the U.S., there was a time period they returned us to the gold standard. Most countries went off the gold standard in 1914 in order to pay for World War I. They needed to be able to expand the money supply really fast to pay for World War I. And so the feds returned the U.S. to the gold standard in 1929. We went off it in 1971 with Richard Nixon, as some of you remember that. But that helped create some of the 1929 stock market crash that moved us into the Depression, because there was people were forced to sell their gold back to the government, and it created this contraction of the money supply because they set the amount at what an ounce of gold was worth. We could also make an effort here to nationalize the Federal Reserve again. There are those that would like to see that. There's those that would like to see us abolish it. As you can see, it's pretty well established. Credit unions and community banks, they are not alternative currencies, but again, this is where I would say to put your money if you have cash in the U.S. and if you have similar things in other countries. These are more stable banks. They pay back dividends. They reinvest into the community. They're more stable. They're not in it to gamble on Wall Street. They're in it to sustain themselves over long periods of time. Here in the United States, the Federal Deposit Insurance Corporation, which came about in the 1930s when Pluto was in Cancer and we were trying to figure out how to deal with the Depression. That means that the federal government, banks have to put so much money into the FDIC, and the federal government insures your account, be it a checking or savings account, up to $250,000. Now, there are those that feel that our banks have such low reserves in the fractional reserve system, and they gamble so much that if we have another big crash, the FDIC will not be able to cover and actually maintain that we get to keep our $250,000 if we have that much in a bank account. But the credit unions and community banks are much more favorable over the too big to fail banks. Now the BIS is the Leroy Basel Institute in Switzerland or something like that. They're kind of
International
like
BIS is Basel International Settlements. It's how all the currency comparable prices of currencies are determined. Yeah.
It is the central bank's central bank. So US has a central bank, Canada has a central bank, England has a central bank. BIS is the central bank over all those central banks. It is the final collecting house. And I'm remembering something that I forgot to mention. I'll mention it here right now. I forgot to put a slide in on this. We're all familiar with the term bailout. when we had a couple of these banks fail in 2008, what did the government do on the taxpayers' back? We bailed out these too big to fail banks, and they eventually paid back most of it, but the ones that failed, so many of them were sold pennies on the dollar. Lots of people lost money overnight. We've moved from bailouts to a concept that's called bail-in, which means, and you might have heard this in the news with Cyprus a few years ago, basically if a bank fails, and by the way, this has been made policy in the U.S. I'm pretty sure it's policy in U.S. and Canada as well. Europe will mean the European Union. Um, these were policies that have been quietly passed over the last few years, whereby, for instance, if we have another bank that's too big to fail, that fails, they can take your cash in your checking account from you, and they will give you, in return, stock in the bank. In other words, we will bail in the next time we have a financial downturn of these big, too big to fail banks. Bail-ins. Go do Googling on that and educate yourself on that. What's happening to the credit unions and community banks, though, is BIS is requiring increasing reserve ratios. They've been systematically since 2009-10 requiring the banks to go from 3% to 4% to 5%. I don't know exactly what it is right now in the U.S., but that reserve ratio with the fractional reserve lending, they're saying you got to keep more money in the bank. You got to keep more money you got to keep more money in reserves. And so that is creating a stress on a lot of small banks. Um, and along with that, in 2010 in the U.S., the Dodd-Frank Act was passed, and it was supposed to save us from the too big to fail banks. It didn't, but what it did create was reporting requirements that are so laborious that it is really hard financially on credit unions and community banks because so much of their profit is having to go towards all these reporting requirements. Now, if you're a Wells Fargo or a US bank, you got a lot of money that you can meet these reporting requirements pretty easily, but it's really taxing a lot of the smaller banks, and that's why you've seen some of these smaller banks closing down across the U.S. Now, more on some choices and what we can do in a bit, but I'd like to just talk about Bitcoin. I did do some more research into Bitcoin because this has been something that was pretty popular here over the last 5 years or so. We've not heard too much about it recently, but that's because we've kind of been in this quasi recovery in the U.S., and so complacency starts to come around. Here's a little bit about the pros of Bitcoin. It is the first real digital currency. Basically, it is a digital asset and payment system that eliminates the middleman of the bank. It's also known as cryptocurrency or decentralized virtual currency. In other words, the transactions between what we will call currency and goods and services, the transactions take place directly between the users. Again, no bank involved, no credit card company involved that wants to charge interest, no debit card involved that wants to use a fee to provide the transaction. Now, with Bitcoins, there can be exchange fees, and they'll range between 0 to 2%. Rarely do they go over 2% because the debit cards charge 2 to 3%. When you go buy a goods, let's say you use your debit card at Target, and you buy a dress for $50 plus tax. Embedded into that, Target has to pay that debit card company who gave you your card, they have to pay a fee, 2 to 3%. Any of you who go on to ea.net and buy goods and services from us, you get a subscription to the Astro Library, you get a course segment, we have to pay because we're a small business. I think we pay 3 point something now off of whatever you buy. The uh, debit and credit card companies take their money belly up. You know this from PayPal. So it still happens in Bitcoin, but Bitcoin is known as charging lower exchange fees than, say, PayPal or your debit cards. Now, Bitcoin has been the most successful alternative currency, and as of 2014, there were over 100,000 merchants that would accept Bitcoin. I don't know what the 2015 statistics are. I haven't seen anything published in regards to that.
But
So this is, go ahead.
I just had some recent news on Bitcoin. They have a current market value now. The primary exchange for this cryptocurrency is right around $9 to $10 billion. Just to compare that to another company you mentioned called PayPal. PayPal's current market value is about 45 billion. So you see, these alternative currencies are all 20%. I mean, it's kind of a big move in some of these alternative currencies, and Bitcoin is not the only one. There's about 4 or 5 other major ones out there. And what the interesting part of the phenomena is, I followed it, on some of the business pages of the internet news, is inherently when, and you mentioned Cyprus earlier, whenever there's a question on some of these traditional currencies, like the euro, for example, you'll see a spike in the price of these alternative currencies because, again, it's just a fear-based deal. But more recently, what's going on in China is really spiking some of these cryptocurrencies because China has an inherent amount of debt issues, and they continue to devalue the yuan. And so a lot of those people that are holding lots of wands in their accounts are investing in Bitcoin. So right now, Bitcoin's about ready to go over $600 a share and raise that, just because of some of this buying pressure from the Chinese primarily, but many other people in other countries when their currency is coming to question. So it's kind of an interesting phenomena that's right in line with decentralized banking and populist banking.
It is, and the last word has not been written yet. Here's the new research that I have found. Here's the cons about Bitcoin. They have finally shown that there was an Oriental guy from Australia who was the creator of Bitcoins. And basically what they're calling it, and then he released it as open source software. And so what he basically created with his software, it's come to be known as what we call a blockchain technology. And as simple as you can make that, what that means is each unit or Bitcoin is encrypted so that Bitcoin can never be spent twice. In other words, it really, in some ways, helps take care of some fraud issues in some ways. But here's the thing. What that means is each Bitcoin in the blockchain system has an individual tracking number. And so right now, the blockchain system of Bitcoin is distributed by many individual users. All of you who invest in Bitcoin, use Bitcoin, no one has the master key. And Bitcoins are anonymous. They all have their own, trackable number. It's a true digital currency. And no one knows who owns that number. No one knows who spent that number. So there are some businesses and governments that are afraid to use it because it invites abuse with, all your anti-money laundering schemes and terrorism and all of that kind of stuff. But here's the important thing to get about the Bitcoin technology, which is, again, a blockchain. That's the term that's used for it, technology. And blockchain means each unit or Bitcoin is digitally encrypted with numbers that's unique to that unit or Bitcoin. Again, it has created the first true digital currency, and what the powers that be they financial elites or government powers, they are realizing that there is now an open source software or blockchain technology out there that if they adopt it, can be used to control and turn money on and off digitally. So guess what? And I didn't know this stuff when I decided 3-4 months ago I need to do an update on public banking. I'm just, because it's my passion, I need to do an update on it. I did not know this stuff when it didn't happen when I set my class. Last month, there was a secret meeting of 100 plus executives from the world's largest financial institutions. They met in Times Square office of NASDAQ Inc. And the purpose of this meeting was to figure out how to create US dollars into true digital assets through the blockchain technology. Again, the Australian Sumi blah, 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 whoever that guy is that is now confessed to being the source of writing the software. It's open source software, and it eliminates banks, debit and credit cards, eliminates checks, and oh, by the way, what if it eliminates cash? And the only way that you can have a currency is if it is a blockchain technology. And what if there's some entity, be it the financial elites or be it a government, that control it? Now, they met to see how they could do this debiting and crediting of ledgers and how this could happen automatically without banks and supposedly controlled by a referee, which we would hope would be a government, which may or may not be a bad thing, but could also be a system like the Federal Reserve, could be certain banks. So this is a really, really interesting piece of information right here. And by the way, you see that I italicized the word secret meeting. Did we talk about that already? Federal Reserve, 1910 to 1913. So here are the financial elites going, wait a minute, how can we get in on this Bitcoin technology and basically use it to our advantage? Now, whoever the referee would turn out to be, let's say it's a government, let's say it's a Federal Reserve, private, entity in cahoots with the government, financial too big to fail banks in cahoot with the government. Referee is if we move to a truly digital currency, and again, that could be tracked. Blockchain technology, you can track each unit, each dollar. The referee could award dollars, they could remove them, they could adjust it, they could do whatever they want. They could control all of our money, whether it's in a bank or not. Anytime we were trying to do it in a digital manner, it could be used. So these digital dollars could be manipulated for national security purposes. What if we had governments who went to this blockchain technology and they did not want their citizens to have access to global information or global communications in any way that they considered agnostic or antagonistic to that country's national security interest? There are those that are really, afraid of a blockchain technology coming out. And oh, by the way, the United States Postal Service issued a report here, oh gosh, I want to say in the last month, that they would like to develop Postcoin. They'd like to take the Bitcoin technology, the blockchain technology, and create Bitcoin or Postcoin. Now, that could be a really beneficial thing because the Postal Bank of Japan is extremely successful. The post office in Japan acts as local community banks for citizens in that country, and a major percentage of Japanese banks are public banks. So there, it could be used positive, but here could be some of the negative uses. Now, if the US, or say the US and the European Union, or a lot of our westernized countries band together and decide to do this so they could have more control of these digital currencies, it would create a lot of interest in what you just mentioned a moment ago, Leroy, in non-digital currencies. Say we had countries such as the Russia or China that did not want to get on board with this because, again, whoever controls the digital dollar can have a lot of control here. So watch how this comes through in the news here, okay? There's so much that is just all education of the public that needs to go on here. And so you may see the Russian ruble and the Chinese yuan that are just kind of crashed out right now, skyrocket if US and Europe goes to the blockchain technologies.
So true.
Um, there,
There's been so
there,
many devalued currencies lately,
mm-hmm.
and
And
yeah.
go ahead, go ahead.
Oh, I was just kind of wanting to chime in on that fact that that was another possible outcome of digital dollars. We're very, people are very skeptical of giving their power away to the banks and the computers one more time. So there could be a run on an upside to a lot of these devalued currencies that have really suffered in the short term, at least here lately.
I have a slide with some timing for you coming up here in just a little bit. Remember BIS, which was the Basel International Settlement. Basel is for Basel, Switzerland. An alternative to BIS is SWIFT, and I don't know what it stands for, but it is an alternative global clearing system that is utilized outside the US. Now, it's currently dollar-based, but if we find our North American and European governments and financial interest, if they go to a blockchain technology, we could easily see the SWIFT choose a currency other than the dollar and be an alternative to that. So again, you really are going to be wanting to pay attention to all of these many different currencies and whether or not we see our westernized world moving into this blockchain technology. So right now, Bitcoin, again, it's anonymous and nobody is a referee. No one has a master key. But that technology can be replicated by a government, by a banking system, and with a master key that then has 100% of the control. Interesting information, huh? So back a little bit more to our current banking systems. Last year, banks in the U.S. collected over $30 billion in overdraft fees. Another way of saying that banks took $30 billion from people that had no money. And to give you an example, Leroy and I have, we keep our cash savings in a credit union. We do have a little bit of money and savings and savings account, checking account in one of the more major banks. Basically, it's because I've dealt with that bank for 20, 25 years in my astrology business as a merchant, being able to accept credit and debit cards over on our website. But for instance, if I'm not on top of my bookkeeping and we uh, use our debit card too much and don't have enough money in the checking account and they take it out of our savings account, the bank charges me $12.50 to take my own blankety blank money out of savings and put it into checking to cover my debit. Doesn't matter how much, whether I got a $5 Starbucks or a big transaction. It's the fees that these too big to fail banks are really, really making their money from. As you can see, 30 billion in 2015, and they're taking it from the people. Remember,
I can least
80%
afford it.
of
Yeah.
that can least afford it, and 80% of the citizens are net borrowers.
Mm-hmm.
So I thought that was a very interesting statistic. Now you'll see the source here, Public Banking Institute. I'm going to have more to say on them in a couple of slides. But first of all, I want to just put out these slides that are coming from the Public Banking Institute. They have started another website, whatwallstreetcosts.org. This is one of their projects. And those of you who are in the U.S. know some of these Tea Party people, the ultra-conservatives. Governor Scott Walker has been gutting the state of Wisconsin. The state of Wisconsin and Milwaukee Public Schools have spent a combined $200 million in interest on toxic swap deals, lost $55 million just in fees, including swap termination fees, and interest rate spikes on its auction rate security deals. Milwaukee Public Schools has a capital appreciation bond on which the district will pay the equivalent of a 600% interest rate over 37 years. Source: Roosevelt Institute, Wisconsin Dirty Deals. This is most cities, counties, states put their assets, their pension funds, and their income from their fees that they charge us to, have a driver's license, to have license plates for our cars. That money all goes on to Wall Street. Stay with me on this. Charlotte, North Carolina had to cut its essential services, including police and firemen, because of its $27 million per year interest rate debt swap debts and $45 million termination fees. New Orleans had to borrow from Wall Street banks at staggeringly high interest to keep its essential services running after Hurricane Katrina. Kansas City and Ferguson, Missouri, and Stockton, California all bought into bonds and swaps to fund development. They are causing them to go belly up, and they are creating dangerous, poverty-stricken nightmares for those areas. Remember Ferguson, Missouri in the news, everybody? And how corrupt they found so much of the public employees in that city. The federal government had to come in, investigate it, have most of them quit, try to start over. Jefferson County, Alabama can't house all its jail inmates humanely or pay for prenatal care for poor mothers or keep its court system functioning due to a Wall Street con job used to finance its sewer repairs. This is, again, a pet project from the Public Banking Institute on how all of the Wall Street banking elites have, basically conned all of these public entities. Leroy, I didn't put a slide in on swap debts. Can you, off the cuff, help explain what that might be if anybody's got a question on it?
It's just insurance against a debt going bad, and it's another bet that Wall Street makes and can make on either side of a bond issue. So if you don't think a bond issue is good, I mean, who saw
If you don't think Ferguson, Missouri can pay its debt,
right, then you buy the
that it
credit
was
default swaps, and so that's one thing that Wall Street is so famous for. They put people on both sides of the same bet. It's kind of like a bookie on the Super Bowl. The whole game is not to win the bet. From a bookie's perspective and from the bank's perspective, it's to get so many people betting on both sides of the bet and just take the fees. And the fees is what's going to bust you.
Mm-hmm.
So credit default swaps, if anybody saw the movie, remind me what it with
The Big Short.
the Big Short.
The Big Short.
Credit default swaps was just another tool that they used, that the big banks used to kind of that was really created in the movie to bet against the housing market, so to speak. And yet it works both ways. And again, that was a real nice slide earlier in the presentation about debits and credits and just balancing the books. It's all
Mm-hmm.
about who controls the money and takes the fees. It's not so much about who wins the bet. I hope that made sense to
Fees.
everybody.
Yes, it is, and fees being the same as the interest. There can be
Correct.
fees
Correct.
but there can be both fees and interest.
It's
The fees can be interest. There can be fees plus interest.
and usually it's both. I mean, talk to the Godfather. I mean, that's what it was all about. It's the VIG. It's the VIG. It's the percentage that they get for their participation in any play, and you got to stay in the game. So that's kind of
Mm-hmm.
I guess, a mundane way of looking at it.
Mm-hmm.
But I want to.
Yeah, go ahead.
I got a question on the board from Sean,
Mm-hmm.
who's asking about to review Swift again just one time before we move on. Would that be okay, or do you want me to?
SWIFT. I do not know what it stands for.
I
You
do.
can
It's the
go look.
society. It's the Society for Worldwide Interbank Financial Telecommunications. It's kind of a clearinghouse, a digital clearinghouse, if you will, um, uh, for transactions internationally.
But it's an alternative global clearing system to BIS, Basel International Settlements. That's the whole point of what I understood from my studies.
Mm-hmm.
And again, Basel, Switzerland, that's where we're talking the European financial elites, if we go back far enough, which have a lot of the control over the European Union and North America, basically Canada and the US. All of their banking is cleared through the BIS. And the BIS, again, acts as a central banker to the central banks of these Western countries. SWIFT is probably where we're going to see, if not already, the Russian and the Chinese. There's also another acronym called BRICS, B-R-I-C-S, which stands for Brazil, Russia, India, China, and South America. And these are countries that have a certain percentage of their banks in public banks versus private banks. They have much higher percentages of public banks than we do in our Western developed countries. We only have one basically public bank in the U.S., and there's one in Canada in the province of Alberta. More on that, and if you want to really read a fantastic book, I tell everybody, The Public Banking Solution by Ellen Brown. I'm going to have a slide on this coming up. So if I can, hopefully that answered what that is for you. The Public Banking Solution, here's a quote from Ellen Brown, and here's her two books. Here's the first one, webofdebt.com, Web of Debt. Anytime I say it, I put .com on because that's her website. But everything in here is more easily explained in the Public Bank Solution. This is the most recent book that came out in 2013. And Ellen Brown is the creator of the publicbankinginstitute.org. Although she does not run it, she created it, but she has handed it over to a public board. But here's a quote from her. A government that owns its own bank can keep the interest and invest it locally, resulting in the potential savings of 35 to 40%. Remember, a third of the cost of everything is interest? Banking and credit become public utilities, sustaining the economy rather than mining it for private gain. And banks become safe again. They become safe places to store our monies, both our public revenues and our private savings. So this is what this whole public banking movement that I just moved over and used that populist banking revolution term for the title of this, because as you see when we look at the state of North Dakota, which has led the way with this, this is basically what it is. It's the populist revolt. It's the public or the populace waking up and saying, I'm not going to give my money to you anymore. So we have this public versus private central banking debate. That's the history of the U.S. as well as many other countries, and the BRICS have been more successful with it publicly. And central banks, they're non-commercial banks, and they may or may not be independent of government with the following functions. They conduct monetary policy. They oversee the stability of the financial system. They issue the currency notes. They act as a banker to the government. They supervise financial institutions. They regulate payment systems. Now, profits generated from private bank credit end up in private coffers, the CEOs and the shareholders, the too big to fail banks. And that's what our privately controlled Federal Reserve System is all about. But it works in a quasi manner with our federal government. So I think it was back in the early 80s, I think it was the savings loan banks fiasco. At that point, they actually made a switch to U.S. laws where the leftover profits of the Federal Reserve must be returned to the U.S. Treasury. So some of that profit comes back. But the Federal Reserve gets to decide how much of that is profit and return it back. There's never been an audit of the Federal Reserve in the U.S. Profits generated from public bank credit are returned to the public, the taxpayers and its citizens, the youth and the elderly, the infrastructure. Now, publicbankinginstitute.org, if you want to look for it, was established in the United States a few years ago, again by Ellen Brown. She is my hero. It was established to promote public banking options that return interest back to taxpayers to invest in infrastructure needs and pension funds. So public banking is banking operated in the public interest through institutions owned by the people through their respective governments. Public banks can exist at all levels, from local to state to national or even international. And any governmental body, and this is going to be typically true outside of the U.S. in any country, any governmental body, be it a city or a county or a state, which can meet local banking requirements, may theoretically create such a financial institution. And guess who did it the best? And so the Public Banking Institute actually has state chapters in the U.S. You can go to this website and you can see, if you live in Massachusetts or you live in Mexico, you can see how active your state is in the public banking movement. How well are you emulating what the Bank of North Dakota has done for the last 100 years, minus 6? That's when I hope we really can see it coming out, and they're really pushing for the 100-year anniversary of BND, or the Bank of North Dakota. And so, I mean, this is the revolution that needs to happen. So here's the thing about the Bank of North Dakota. It was formed in 1919 as a state-owned bank, and I'm from South Dakota, and North Dakota and South Dakota are twins. And so we have the same birth dates, although North Dakota is Bismarck and South Dakota is was formulated in Yankton, or many people use Pierre, which is the state capital. November 2nd, 1889, if you want the birth data for the Bank of North Dakota. November 2nd, 1889, 2:43 p.m., Bismarck, North Dakota.
Are they also Sun
South
and Scorpio?
Their sun in Scorpio. North Dakota has an Aquarius rising. I want to say South Dakota. I don't remember if it's. I was trying to look for the chart really quick. I didn't find it. North Dakota. Oh, wait a minute. Wait a minute. I got my little handy reference right here.
Sorry, I
Um,
didn't mean to put you on the spot.
no, that's okay. Yeah. North Dakota. I didn't put the slide in, so hold on a second. I'm just turning to the chart for the state. Oh, 2:40, not 2:43 p.m., 2:40 p.m. November 2nd, 1889, 2:40 p.m., Bismarck, North Dakota, 24-degree Aquarius rising, moon 12 degrees Pisces, Neptune traveling 12 degrees Pisces right now. So that's probably to me the most interesting thing that's coming out. They have, both South Dakota and North Dakota have a Mercury-Uranus conjunction between 22-23 degrees Libra that is currently being squared by Uranus in Aries. And we can look at it being squared by Pluto here as they get close to their 100-year celebration. But again, back in the early 1900s, up here in the northern plains, there was a lot of distrust with the railroad barons. And when the railroads came west, wherever the railroads went and whoever owned the railroads, they were the financial elite in the northern plains. And so the farmers did a lot of rebelling against these financial elites. They called them the railroad
Robber
robbers.
barons.
The robber barons, yes, so instead of the railroad barons. And so the North Dakota was smart enough to create its own bank in all of this, and basically to help out the farmers so they didn't have to pay all these usury interest rates. So North Dakota as a state is mandated to deposit all its state's revenues into its own state-owned bank over Wall Street. Here's a picture of it in the background for you. Now, through the 2008 meltdown, and stay tuned, I'll talk about oil in a minute. They had, and to this day, lowest foreclosure rate in the country, lowest credit card default rate, lowest student loan default rate, lowest unemployment rate, no state debt. They have a population of 750,000. They have more banks per capita than any other state in the union. So North Dakota acts like a central bank. You can't deposit as an individual. You can't deposit your funds in BND. It partners with private commercial banks. And so here's one of the big things. The private banks, they don't mind BND. They love BND because BND buys their loans so they can go out and make more loans.
It's their
That's why
backstop.
there are,
It's their
yeah,
backstop.
that's why, yeah. The BND guarantees their loans if something happens and a company, oil industries, anybody, goes belly up. And so that's, again, why they have more banks per capita than any other bank. Now, BND always, it's a public bank. It's a state-owned bank, but it's public. Its stockholders are the citizens. So they have to produce their earnings report every year, and it comes out every April, and everybody is always interested in it. There was a article, one of Ellen Brown's articles from Web of Debt. The Bank of North Dakota is more profitable than Goldman Sachs and J.P. Morgan. And however, everybody attributes that to the oil. Well, guess what? That price of oil that we all love right now, That went down in mid 2014. That's when my nephew lost his job in North Dakota and moved back home. So we've went almost 2 years now with record low oil prices, all of 2015. The BND has had record profits for the last 12 years, each year outperforming the last. In 2015, BND reported 137 million in earnings off of assets of 7.4 billion, capital of 749 million, and their return on investment was 18% last year. This is a state of 750,000 that made 18% off of its own money, off of its own assets. Last year, oil downturn, lending portfolio grew by 486 million. What happens whenever there is an economic downturn? Everybody gets a pink slip and entrepreneurialism grows. That's what this is. And they had a 12.7% increase with growth in all 4 of its areas of concentration. In other words, the Bank of North Dakota was created to help 4 different areas in the state. Agriculture, remember all the farmers with the robber, what did you call it? I never can remember that. Robber barons.
Against the robber barons. Yeah.
Robber baron. Railroad in our case. There its mission statement, if you want to say that, is to promote business, and it's to promote residential, think mortgages and student loans. Remember, lowest default of student loans in the country, because they don't have to do federal loans, they do their own. And oh, by the way, for those of you who are familiar with the Red River, which starts in northeastern South Dakota and runs north through North Dakota and drops into the Hudson Bay. I think it's in Winnipeg, and it's a real low valley. When last time we went to Winnipeg, everything was flooded, and you'll hear about Fargo on the Red River always flooding. FEMA doesn't have to show up. I would hope they would take advantage of FEMA because they probably pay federal taxes, of course, but North Dakota, when there's a disaster, they immediately fund their own projects, because they are setting on something like $1.3 billion in cash for 750,000 people. In 2015, I'm sure this could be some of this in response to the oil downturn, BND introduced new infrastructure programs to improve access to medical facilities, to remodel and or construct new schools, and to build new road and water infrastructure. The water infrastructure would be to all the fracking that's been going on with the natural gas as well as the oil. And again, as we have known, for the fact that the city of Fargo floods when the Red River floods. In 2015, the Farm Financial Stability Loan was introduced to assist farmers affected by low commodity prices or below average crop production. For you city folks, not only has the price of oil went down, but remember when we started going hog wild to grow corn for ethanol? And it's now coming out through research that ethanol pollutes the environment more than regular gas in many ways, that ethanol does not run more efficiently in vehicles, and there's so much subsidy to the ethanol production. It doesn't, they're coming to realize it really doesn't work very good. It is not an alternative energy. And so the price of corn has went from and the price of land has went from skyrocketing prices to low prices, very low prices before the ethanol boom that went on. The world is awash in excess corn. So the price is down. What happened is up in our neck of the woods, farmers took out shelter belts that they built 100, 200 years ago. They took out the watersheds for the animals, for the fowl, and and planted corn from field to field. It's slowly starting to reverse, but that's why this was created. And as you can see from the bottom here, the BND funded 300 new businesses last year. That entrepreneurialism with the lower price of oil. So imagine this multiplied 49 times in all our different states if you're a US citizen. Imagine this multiplied and expanded upon from Alberta to all of Canada. By the way, the Trudeau administration did not go alternative in this direction. They went with the financial elites. So a little disappointed with Prime Minister Trudeau here. Imagine that this is multiplied in municipalities. Go ahead, Leroy.
Well, I just wanted to point out that all this good news from 2015 and 2016 won't be a lot different in my estimation, is when they had a major part of their economy go under deep financial stress, the oil field. Rigs shut down. I mean, they're only operating at, I don't know what the number is, but it's like
Oh,
the rig
I
count's
think
down
they're,
75%.
yeah. Mm-hmm.
And so
Yeah.
everybody thought that that would be the end of North Dakota, but this is exactly why populist and public banking is so necessary to, it can still be a success story, even as a backstop for when a particular industry goes belly up for a while.
Instead of, well, we can compare it on a national level to 2008. Look at how we became aware of the concept of the 1%. Look at where all of the wealth has went during that time period, while people lost their homes, people lost their jobs. Are you making more money than you did in 2008? I'm not self-employed. And yet, look at the difference, like Leroy just described, in North Dakota, where all of those fees and interest income went into the public state
To the
coffers
citizenry.
rather to the citizenry rather than the 1% financial elite. It went to the 99%. And so this is the movement that is my passion, to just help people, recognize all of this. And this is why, you know, go join the Public Banking Institute. What's happening on your state in the US? We could have every city in the US create one of these instead of Ferguson, Missouri and Stockton, California and New Orleans just going through bankruptcy, and the Flint, water thing that's happened in Detroit where they, you know, confiscated everything and with the water system, and they got lead in the water. That stuff doesn't have to happen, and we can turn it around. Now, the leading edge of this public banking thing is Santa Fe, New Mexico. Their city council gets it. And if you, I mean, pay attention to what's happening there. And the other place where this is really happening is Philadelphia, because what is that? Independence Hall. That's where the Declaration of Independence came from, with, what England was doing to the colonies. So these two areas are getting it. And somewhere like half of the states in the US are either researching it or doing studies. I was a lobbyist in the state of South Dakota on environmental issues for almost 6 years, and I got really hot on this, and I tried to go to the state legislature, and I drug Leroy around and my middle school kid, and put a hand out in all the legislators' boxes and tried to lobby and speak to people, and it just went over their heads. And I thought, forget it. I'm not. I'm going to wait a while. I'm going to go back to the public. I'm going to go back to astrologers who are interested in prosperity. But I just feel with the U.S., getting ready to come to its Pluto return in 2022, we're so ripe for this. If you have cash, if you have assets, put it in credit unions, put it in community banks. If you want to do many metal commodities, that's okay. Again, I don't think we have to overturn the Federal Reserve. I don't think we have to do away with the dollar. I think that we take their own system and do it for ourselves. And we don't have to change any, very little laws to do it. A city can change a city ordinance and create a bank. A county can change a county ordinance and create a bank. And so, I mean, the change is going to come from the grassroots up with Pluto and Capricorn. Pluto and Capricorn is the plutocrats, the powers that be, the 1% wanting to keep the control. The polarity Cancer is the community, is the grassroots. The same thing, Uranus in Aries is breaking it all apart, and the Libra polarity is the groups. So it is about as many of us really grasping this and spreading the word as we possibly can. Anything you want to add, Leroy? Anything anybody else wants to add? I have some astrological timing to look at here before we finish up, but
you better wrap it up. Yep, go ahead.
I've just been blown away, and maybe it's because North Dakota is my twin state that I jumped on this, but I guess what really got me connected to it was when Pluto went into Capricorn and we had that financial meltdown, and I'm like, geez, I better educate myself as an astrologer on financial astrology a little bit. And it just led to this, and I'm grateful to the dear friend who turned me on to Ellen Brown before 2008. And go to ellenbrownswebofdebt.com. Here's the next thing. Here's the two websites. Here's her books. Here's Robert Gover's Time and Money. Again, this is great for astrologers, and it's great for people who just want to visit some U.S. history, even if you don't know astrology. Robert had a second edition of his book published before he crossed over. And so by all means, see if you can get a copy of that. He did a lot of updates. I want to say it was published in the early 2000s. It was after 2008, I think, when he did that second edition. So here's the Gemini rising chart. And many of us know with Pluto and Sag, we're going to have Pluto move into Capricorn December 19th, 2017 through December 16th, 2020. Here's the Saturn-Pluto conjunction, the next one, which is going to come January 12th, 2020, one time. I don't know if it's 12 p.m. I just chose that as the date, but they're both there by minute, so it's going to be close to this time period. And this is a 33-year cycle. Saturn-Pluto is a 33-year cycle. And here's Saturn in its own sign. Here is the plutocrats. They're at 23 degrees Capricorn. They're balsamic Pluto here at 27.5. But look where the nodes of the moon will be on this natal Jupiter in Cancer, in orb of the U.S. chart. The south node is going to have a Jupiter conjunction. Jupiter is opposite to this natal Jupiter. Here's the power struggle between who's going to control the money. And yet, as we have this Saturn-Pluto conjunction, the monetary systems that we have in place right now are not sustainable. We're never going to pay off the public debt. We could starve every citizen in the U.S. We won't pay off the federal debt. But if we can get this grassroots movement going and take back the power and control of these monetary policies, we can create prosperity. And so I'm hoping, because this is going to happen in 2020, and the Bank of North Dakota is going to have their 100-year anniversary in 1919, we've got 3 years here in which we can really spread this word and get this going. And all we're going to need is a Santa Fe and a Philadelphia and a half a dozen states to be successful, and you'll see every city in the union scrambling to do this. I'm hopeful, and I just really want to see us do our part. Now, as Saturn moves through Capricorn here, here's the aspects it's going to make, and I can come back to this chart. It's going to oppose natal Venus once, oppose Jupiter 3 times, oppose Sun once, square Saturn 3 times, square Chiron 3 times, oppose Mercury, all this 2018, 2019 to 2020. Now, I'll go back to this chart, but let me just show you. Here's its transit through Capricorn. Here's the one Saturn-Pluto conjunction, who gets the control, and here is Saturn over the natal U.S. Pluto 3 times in 2020 as well. So you can see how active this is going to be. There's astrologers already writing about the year 2020. Like Maurice Fernandez, his hot topic is, are we going to see a global war? Stay tuned. I hope not. But you get my point, my passion with these aspects, and how, again, Saturn is going to oppose Venus, Jupiter, Sun. It's going to square Saturn. It's going to square Chiron. It's going to oppose Mercury. And it's going to go over the U.S. Pluto before transiting Pluto in Capricorn makes 3 conjunctions to the natal Pluto in 2022. So there's a lot of momentum here. Are we going to crash further yet? Are we going to crash financially again? I don't think that's going to happen. Robert Gover in Time and Money always wrote that stock market crashes happened when there were major aspects to the Neptune-Mars square in the U.S. chart. Doesn't matter which chart you use, Sibley or Gemini rising, we still have this Mars-Neptune square. Neptune will oppose the natal Neptune and square that Mars in the early 2020s, the 2022 time period, right about the time period that the U.S. has its Pluto return. So this could be some upsets in this time period. And so again, if we can get this grassroots movement going, I am so waiting to see Santa Fe create a public city bank and to get a year or 2 of records. Well, I'll shut up. Go ahead.
Well, I'm hearing you talk, and I see these transits, and you just got to know that Saturn is still that great accountant in the sky.
Yep.
And we've got all this massive amount of public debt, private debt that it will not be paid off because it's impossible to do it in a contracting economy, quite frankly. So you just have to be objective about it. That a whole revolutions like the populist banking revolution is built upon significant change. So let's just hope for the best and prepare for the opportunity.
Mm-hmm. That's exactly it. That's exactly it. And, in regards to Canada, I think Canada is close enough to the U.S. And since I've seen Premier Trudeau went with the traditional financial elites instead of bringing, by the way, Canada had public banking, I want to say from the 1930s to the 1970s. Don't quote me on that. And then they went off it. And during that whole time period, they were so much better off financially. And then the same financial elites that, privatized the Federal Reserve won over in Canada as well. The battle's going on in Australia. Australia's probably been one of the most successful countries with public banking. along with Japan, and it's much different versus, if you look at the financial elite, and especially go research Edward Griffin, the author of The Creature from Jekyll Island, and some of the articles he's wrote. If you research how much the financial elite controls the media, what you hear about Japan and China, and what you can find out and read about them in other ways, there's two different stories that go on. That's what I love about Ellen Brown. She'll write about it so much differently. And there's these underhanded movements to destroy countries that have majorities of public banking. I've not looked into specifically with what's going on in Venezuela, but there's a lot of that stuff that's going on, and it's these guys coming in underhandedly, could be some women too, and again, just trying to destroy the currencies, hyperinflation, trying to destroy everything in order for the private bankings to take over. And so if you care to go research it, there's a lot to do. But the easiest thing, if you're citizens of the US, Canada, which are most of our listeners, even perhaps the European Union, Greece is so close to doing this. We'll see what England does. I don't know enough about that to say whether Brexit is yay or nay. But the model that North Dakota has done can be replicated all over the world. Comments, questions from anybody? I've made it through my slides, other than I have a free Mercury retrograde class coming up here.
Well, if Brexit does happen June 23rd, and it is a yay vote for the exit of the British Union, you'll see all the Eastern European currencies sell off dramatically. They'll just be toast, because most of the financing will go away for some of those lesser developed, or let's say lesser expanding economies in Eastern Europe. And that could cause a ripple effect. So again, it's just another, and you'll probably see Bitcoins and all those other cryptocurrencies expand because of the questions to the euro. But might be a short-term thing, but it could also possibly be a accelerator in some level.
Mm-hmm. I looked it up. North Dakota's rising is, what did I say, 24 Aquarius. South Dakota's rising is 3 degrees Pisces. Even though it's the same date, same time, it's a different place. And so they're both third house Plutos, both Pisces risings, but South Dakota's an 8th house sun, North Dakota's a 9th house sun. I think that Aquarius rising of North Dakota is really what caused them to break free and do it alternatively.
Oh.
Mm-hmm. Again, any other comments or questions? I hope this has been hopeful to you, and I hope that this inspires you to want to be a part of creating prosperity for all and really moving us into giving, sharing, and including for all of us, the basis of matriarchal principles and natural law. I'm taking a bit of a break this summer, so I didn't look in to see classes in September. I know I'll do a series on Jupiter and Libra in September. However, I do have a free Mercury retrograde class that probably is a Monday 29th, August 29th, 2016. If you're interested in that, subscribe to our email newsletter, and that will give you the free link for that podcast when it comes up. So thank you, everyone. I really appreciate you tuning into this, and I wish you all the best and prosperity to your heart's desire. Thank you.